Now, as far as I'm concerned, we're past the point of no return. And the banks know it, sovereign wealth funds know it, family offices know it, even BlackRock knows it. And so, what's going to take place, we don't know, but it's more uncertainty, more instability, and more basic into safety, which isn't the currency de jure, which there will be a huge run of the US dollar because it is the most trusted currency. But at the same time, you'll see a run to precious metals. And we've already seen it begin with the central banks. It just hasn't spilled over into the pension funds or into, let's say, the general public, of course.
Over the years, gold bugs, bullion dealers, and top investors in the space have had one central message for us all. The current fiat-based global financial system is unsustainable and dying. Many of these experts have posited that as the collapse nears, central banks will consider returning to a gold standard, which will be based on a globally recognized and acceptable commodity that has served the world for thousands of years. These warnings soon gained more traction as countries like the United States accumulated more and more debts, and central banks started turning away from US Treasuries and refilling their coffers with gold, an idea they had all dropped decades ago. In 2022 alone, the world's reserve banks bought 1,136 tons of gold, the most since 1967, the second highest value since 1950, and more than a 150% increase compared to the amount they bought in 2021. According to David Morgan, a renowned financial expert and publisher of the Morgan Report, the gradual, then not-so-gradual accumulation of gold and silver by central banks is not only a testament to the relevance of both assets, but also a huge warning that you need to prepare for what's coming. So far, only central banks have been buying at an unprecedented rate, thanks to the constant manipulation of prices that has been driving away other investors. However, starting as soon as a few weeks, Morgan is certain that there will be a noticeable reversal in the trend. Not only will central banks continue accumulating gold and other metals and dumping US Treasury bonds, but other investors, especially retail investors, will be rushing to buy gold. We will now bring you clips from Morgan's recent interview with the Strategic Wealth Preservation YouTube channel. But before we do, please like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other metals. Thanks, and enjoy the video.
I'm actually fairly conservative. I mean, people can have whatever opinion they'd like. So I looked at the 13% in 2023, and I said, well, what would 13% do in 2024? With factoring in that, nothing seems to be getting better on a fundamental basis. I mean, things that move, markets and the precious metals in particular, the bombs move markets. Political uncertainty move markets. I mean, 80% of the world's nation states have a new leader election this year. I mean, that's profound. I wrote about that in the Morgan Report. Regardless, so I looked at another 13% on top of the high, and so I got to 2,500 as my max. My min is somewhere around 2,250. I didn't expect it to end the year at 2,500, but who knows? And I always have to give the caveat, Mark, as I'm sure you probably do. And this is bearing a black swan. I mean, this is bearing, a cyber attack of significance that takes down a money center bank, bond default by a major nation state, that type of thing. And of course, we can't rule those out. In fact, we have more and more pressure in that direction than ever. So on silver, it's even more difficult. To me, watching the markets as carefully as I have, especially the metals and the commodity sector, it looks like there's a big defense at around the $30 level. And there's no reason silver shouldn't be $30 today, but it isn't. And I forecast that we could see that level. I think it's going to be very difficult to get through that level, but I do believe it will. Whether it'll do it in 2024 or not remains to be determined. There's stepping back and adding on to the answer. The late, great Jim Dines, who I read on and off for 40 years or something, had a theory that was a confirmation theory, just like the Dow theory. So silver had to confirm gold's move. And really, it hasn't done that. I mean, for silver to confirm gold's move, it would have to go, and it's an art, not a science. Would it have to make a new high? No. But it would have to be like in the 30-ish range in how I look at this confirmation. I think it'll come, but it's been very, very trying because of the fact that the use of silver continues to increase. And we've seen things happen that are unusual. meaning with the gold move and the algorithms that play off each other in an 85% correlation gold to silver until recent. When we saw these very tradable moves in the silver market and very little participation on the institutional side, and seeing what the institutionals play, which are the ETFs, diminish in their physical holdings, that leaves one scratching their head. Why do we have this fundamental setup that's a gimme for a $2, $3 move that's happened a few times in 2023? And yet very little participation. And at the same time, what counts the most, the physical supply is being drained off of the ETFs, not into the ETFs. Whereas if you go to Big Brother Gold, the opposite is happening. Again, it leaves one scratching.
It is no news that there has been a noticeable difference in the performance of gold and silver over the past year. While gold bullishly notched a new all-time high in December, silver couldn't be farther from its April 2011 all-time high of almost $50. Yet, experts are certain that investing in silver is not a lost art in 2024. In fact, Morgan and others advocate putting at least a portion of your investments in silver. During the interview, Morgan further discussed the importance of preparing for what's coming by holding a portion of your wealth in precious metals. Like other bullion commentators, he underscores the importance of what central banks are doing, explaining that they are the most savvy investors with a wealth of resources. Yet, they have been accumulating these metals voraciously. According to Morgan, that can only mean we are getting closer and closer to the end game. Let's get back to the interview.
The question I'd like to ask you now is why a close relative should invest in precious metals today?
Political uncertainty. I mean, all the fundamentals for having a hedge position. Certainly, you don't have to put your life savings into precious metals. In fact, I still would submit that that's foolish to do so. But nonetheless, to not have an exposure to precious metals is also foolish. So if you don't have a position always, I mean, I have a niece that bought silver on my recommendation, not gold, and she's upset. She doesn't understand what's going on. Well, two reasons. One is geopolitical uncertainty. Second is all fiat fails. I know I've said it almost every interview, but it's true. And even though the dollar is strong, it's strong relative to what? All of their currencies. Why? Well, two reasons. One is that we're able to export inflation. We, the United States, is able to export inflation to all other countries. So they have to inflate to keep up with the depreciation of the currency on a global basis. And then some depreciate at a faster rate. So if you're destroying your currency faster than the US dollar, then the dollar index will look stronger than you because you're printing more worthless units faster. So because of those facts, and we don't know the timing, it's good to have a physical position that is the right amount for you. And I still submit for most people, that's probably 10%. Although if you do the math, it's more like 20%, 25%, although that sounds extremely high. It's been because of the uncertainty of the financial system since 1971, 50-something years ago, when we destabilized the entire world monetary system based on the fact that it floats. It's an unknown. It varies on a daily basis. And the foreign exchange markets are nothing more than one large giant casino. So we're in a new territory. We've been here before in monetary history. Fiat's always failed. It's never failed to the extent that this one could, because again, we're all interconnected through the reserve currency. So we have a very big contraction in the global economy. And because of that fact, that's what we should pay attention to. And no correct interest rate is going to fix that. And that's the real crux of the issue. So interest rates could go higher. I doubt they will. They could pause, which they will eventually. They'll come down probably. But will that be enough? And the answer is no. Now, as far as I'm concerned, we're past the point of no return. There is no, now that the curtain has been pulled and we see the Fed for what they really are, moving these dials back and forth, pushing levers back and forth, and putting on a good show in front of everybody with this great big facade, that's been exposed. And the banks know it. The sovereign wealth funds know it. Family offices know it. Even BlackRock knows it. And so what's going to take place, we don't know, but it's more uncertainty, more instability, and more basic run to safety, which isn't the currency de jure, which there will be a huge run in the US dollar because it is the most trusted currency. But at the same time, you'll see a run to precious metals. And we've already seen it begin with the central banks. It just hasn't spilled over into the pension funds or into, let's say, the general public, of course, but it will. And once that starts, regardless of where interest rates are, because it could take place regardless of interest rates, that is sort of a signal to all of us to either add to our position, and hopefully, and not necessarily if you already have a core position, you don't have to, but that would be the time to really evaluate what safety is. And there's nothing out there in the equity side or the bond market that provides a safety of money. And gold and silver have been money for thousands of years, will continue to fulfill that regardless of whatever you're told on the mainstream financial press.
One scenario several experts, from David Morgan to Andy Schechtman, have about the end of silver and gold price suppression involves the complete breakdown of the current financial system. The world's fiat-based debt system is propped up by central banks that consistently debase all currencies and lower their value by printing recklessly every time they run into a challenge. Over the past 5 to 6 decades, central banks like the US Federal Reserve could and did print as much as they wanted. However, that might not be possible for much longer. The United States, for example, now has a 130% debt to GDP ratio. Experts warn that this has been a point of no return for other countries and empires that have fallen from grace. No economy that has reached a 130% debt to GDP ratio has been able to get out of the problem without a nasty default. This is why financial experts and sound money advocates have been warning about the impending collapse of the United States economy. Morgan believes that time is much closer than everyone believes, and when it finally happens, everyone will be rushing towards safe haven assets like gold and silver. David Morgan is certain that gold and silver are going to take more prominent places in investing and global finance going forward. Do you agree with his assessment? Please drop your comments in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and check out our other videos. Thanks for watching.